Yo, what is up, everyone? My name is Dom, and we're here to talk about unusual options activity. All right, let's kick it off with the disclaimer here. Disclaimer: this video is for educational purposes only. The statements made in this program here are solely the opinion of the show, and we're not a specific inducement to make an investment. One must perform their own due diligence and realize that all investments carry risk. There is no guarantee of profit. All right, everyone. Now today was this super ugly at the open here. The indexes had a huge turnaround here. The market had a nice turnaround. I was aggressively buying stuff this morning, and while the market was down in and around the morning time, and I'm happy I did. Risk reward. You take a little risk. Things have been steady in a downtrend here. The Nasdaq has obviously been in a downtrend for a few weeks to a month now, but it just seemed like things were overshooting to the downside a little bit this morning. There was a lot of stocks that I really liked that were down double, not double digits, but 5, 6, 7%. So I actually put on some stock positions this morning, and I bought into a little bit of some unusual options activity as well. So, first one I want to bring up is Freeport-McMoRan. I don't think I've ever brought this one up on the channel before. This company is a miner primarily of copper, so it really follows the price of copper futures pretty much to the T, but it has diverged, and we'll take a look at the chart in a second here. So there's a lot of buying in these April 16th 31 strike calls. There's some nice orders down in time sales. People putting down $500,000-$600,000. But as you can see here, I have a position in these. So I bought these July 32 strike calls today, and I was in these July 40 strike calls. I kind of messed up on this trade. I bought these calls way too high. We kind of have a loss in those ones right now. But I saw more people buying some Freeport-McMoRan. I think I actually bought these calls, and then some people came in buying some calls. So sometimes it's good to the unusual options activity is good. It works out a good amount of time, but you got to be willing to make decisions on your own. And I actually picked up these options in the morning time, and then later in the day when the stock was higher, then it looked like some institutions started to come in. So maybe they were following me into this trade. You never know. So yeah, as you can see here, if you look at the price of copper futures, the April copper futures, this Freeport-McMoRan, mostly in copper, like what I said, so it follows the stock chart. Pretty much looks identical to copper, and it looks like Freeport-McMoRan has definitely diverged from the price of copper here. This thing, if you look at the price of copper, it's still kind of hanging around. This I think it's this $4.30 level. Freeport-McMoRan has diverged, so obviously, I don't really think this stock should be diverging from the price of copper, because their company is pretty much, their earnings are pretty much dependent on the price of copper. I just think this thing got caught up in some selling here. So, I thought it was a good opportunity to get into Freeport-McMoRan, and I got in, and then the institutions were getting in after me. So, all right, next one I want to bring up is DraftKings. Now I know some of you that follow this channel like DraftKings a lot, so every time I see unusual options activity in Penn or DraftKings or some of these online gaming stocks, I definitely bring it to the channel. So also a disclosure, I purchased Penn National Gaming as well, because keep an eye on that one. That one is down. I think it's trading around 100 right now, maybe 106, 108. Penn National below 100 is definitely a buy in my opinion. So, we're also in DraftKings. People, we're buying some short-term options here. 5,000 contracts traded. There's some more volume in some of these other calls here. So, I decided to come check it out. We did the scans, picked up the volume there. And, like what I say all the time, sometimes you do scans and, you're able to pick up, some short-term options being traded or whatever. Most of the short-term stuff is retail traders. But then, I was coming down the time sales, check out what else is going on here. And so, if someone's coming in and getting 1,000 of these January 2022 100 strike calls for $575 each, if you do the math here, that's about almost a $600,000 order. There's some all right volume. We didn't pick this particular trade up in the scans, but we were able to pick up in the scans. Some of the shorter term option volume. 5,000 contracts. We're able to pick that up. And that's probably just some retail traders buying those short-term options up here. But I came down the time sales, saw this order right here, so I jumped in. We have a position in the January 2022 100 strike calls. Now like what I say all the time, this is an extremely far out of the money call here. DraftKings is trading at about $66, and they're buying. We have the 100 strike call. Now, since we're going out to 2022 and we have 7, 8 months, 7, 8, 9 months for this trade to work out, I do not mind going that far out of the money. If we were getting something closer, like those Freeport McMoran calls that are only a few months out, I got an at the money call. I'm fine getting, this is an extremely far out of the money call, but it's a cheap bet, and this thing is not going to decay very rapidly whatsoever. And if the stock moves up nicely, this thing is going to move up nicely because of how far out it is. It doesn't really matter, how far out of the money it is. When you're going really far out, this is almost a year away. This isn't 2022 here. So I only do that with 7, 8 months out, buying options that are 7, 8 months out. I don't mind going, pretty far out of the money like that, because it is significantly cheaper, and you get a better return on investment. So, DraftKings actually used to be a SPAC for all of you that don't know. Kind of surprising, but it looks like DraftKings had some resistance here, up at the 64 level here, and what they always say is that prior resistance becomes future support. And looky here, DraftKings closed at the support. 64 is about this support, a little above 64, and then if you drag it over here, we closed right at the support. So I think DraftKings has some good support here. DraftKings used to be a $74 stock just a few days ago, and we were able to pick this one, I think, up at about 64. This thing got caught up in the sell-off again, and I think it was a good time to do some buying earlier. I think this market has to kind of catch up to the economy here. The economy has actually been in a downtrend, not recently, but the stock market has just been, what it seems like up in a straight line. So, I'm kind of being a little more cautious here. I am adding to some high conviction positions here, that is for sure, and kind of kicking to the curb, all that speculative junk. We had to take some losses on that, but, that's a part of the game. We took some big gains in some of those speculative ones, earlier when everything was going up, but, that's how it is, everyone. So, I hope everybody learned something from this video. We kind of did a little extra talking, kind of a longer video, so sorry about that, everyone. Sorry about, not really cutting to the chase. But, I'm here to teach, and, I'm here to learn as well. So, leave a comment down below if you got any questions, and we'll see you in the next one, everyone.